Why do you trade with leverage on markets on shit coins, uh, just to turn around and you're like, what are you doing with it? Are you trying to make more shit coin? What are you trying to do? What's your point?
My point is to buy a Lambo. No, just kidding. Of course, it's to build up wealth, right? I mean, just in
Buy
case
a
you
Lambo.
guys.
Win Lambo.
Oh, I forgot to turn on my camera. Let me fix that very quick. But answering your question, far back in time, my family went through. I mean, start collecting gold. Right. This was something that we picked up from our grandmother, from my grandmother. Right. She taught us. How, I mean, she taught my dad. Right. That he should always get something out of value that he can use in the worst case scenario. And in that case, that was gold. There was a point of on our time in our family that everything went to let's just say it. I mean, went to shit, right? And what we had was gold jewelry, stacks of gold, gold coins, and everything else, right? Thanks to that, we not only made it to that my dad could feed his family, and but also that we were able to get back our feet, right? There is a caveat here, just so you know that we're touching on gold. Gold is not is gonna help you both either get back on your feet, but do not expect it to get full value out of it if you're in an emergency. All right. Why? Because everybody that went buying gold at Costco right now, they're trying to sell it, and you'll see that is not you're not going to sell it at market price. You're going to sell it for a little bit less, or you need a broker to sell it. It's not like you just, hey, who wants gold, right? And everybody's just going to be rushing to you to buy that gold. Of course, that doesn't happen. But learning that lesson, I when I knew about Bitcoin, I was like, hey, this has just too many factors. The bubble from .gov. If you enter early in that bubble, you win a lot of money, right? So I started first for the technology because I already had the equipment to mine it, and second, as I study it, well, then I realized that it has the same added value as gold, right? It has the same characteristics, and I went like, you know what? This looks to be more valuable of what it is right now. Let me buy it and let me accumulate it. So, answering your question, I'm here to accumulate the digital gold. So, in the times of need, at this point, I don't need to sell it for a loss. I can sell it for a profit and get back in my feet whenever I need.
Cool. Exactly. Buy more Bitcoin, right? That's the ultimate goal. I think for most traders. Yes, you can make some money on, some quick money on, some altcoins. Yes, they'd have big moves, but altcoins, we've seen that during bear markets they can drop 95 to 100%. And when you look at something like Cardano, um, we had a breakout on Cardano back in 2021 where it broke like $3.09, and we haven't even gotten close to that on this cycle. So, you know, altcoins don't have that residual growth necessarily across the board. Mind you, Solana, XRP, yeah, they had some parabolic runs this cycle, but really at the end of the day, if you're looking at long-term store value, nothing compares to what Bitcoin does. It's past the Lindy effect, which if you guys don't know what that is, technologies that make it past 10 years tend to last another 10 years, right? And so we broke that on Bitcoin. You look at Ethereum, it came out in 2015. 10 years, guys, that would be at now. And what are we seeing with Ethereum? That it's starting to show some failures in its blockchain technology in comparison with other layer ones, right? So there's a potential failure of the second largest cryptocurrency in the market as a technology, right? So it's very hit or miss on what's going to be of value 10 years from now. But I think that when you look at Bitcoin, definitely has that long-term valuation effect that doesn't seem to be going anywhere anytime soon. So today, guys, I wanted to talk about dollar cost averaging, taking those crypto gains, and how do we get into the markets to maximize the amount of Bitcoin we could have? Well, there's two ways you can do that. One, you can just wait for the bottom of the markets, look at that MVP oscillator and go, there's my bottom and just buy, right? But a lot of times people want that exposure. So how do you get, because no one wants to miss, hey, the market hit a bottom and took off our God candle today, right? So keeping some exposure in the markets tends to be where everyone goes into. Yes, this is being recorded, DB Cooper. We actually went over this in Piper Academy's members session on Wednesday, and it had such a good response that we wanted to make sure that we brought this to TA Plus today. And that one was not recorded on Wednesday, so OC is here today making sure we get this recorded. So you can, look at the MVP oscillator, but people don't want to be without exposure to Bitcoin because there's really only about 10 days in a year that Bitcoin really makes the majority of its moves, if you guys don't know that. So in those 10 days, they're God candles. They're these huge green candles that you don't want to miss that exposure on. So people tend to dollar cost average in. Okay. It might be like 18. I know there's like 10 definitive days of the move that make up a majority, over 50% of the cycle move. So, but people don't want to be without that. I was replying to Buck's comment in the chat. He said I thought it was 18. So for the people watching this recording later, there you go. So they tend to just dollar cost average, but there is a smart way to dollar cost average. And you guys have heard me talk about before about the dynamic dollar cost averaging, the Piper plan that we call it over at the Piper Academy, which works out really well. But I've discovered through a couple of books and some more studies into some other dollar cost average strategies that there's actually a better way to dollar cost average. And that is going with that mentality that you feed your winners and you cut your losers. So if we're going to look at this, I want to go ahead and share my screen, and we're going to bring up this dollar cost average calculator from Into the Cryptoverse. And we're going to talk about some things here. So let's look back here at 2021 on Bitcoin, guys. And let's talk about this day, November 10th, 2021. That was the top of the market back then, okay? And the price at that point there was about 68,864, okay? So let's go over and let's start bringing up the actual Bitcoin DCA simulator here. And we'll look at this first from a DCA perspective. We're going to base this on $100 a week for the simplicity of math. And I've got this set to November the 8th of 2021. Is that the correct date? Did I say that right? Let's go look and see. I want to make sure. No, it's going to be November 10th. I did have that correct on here the first time. So November 10th, 2021 was the top, and we're going to run this all the way to current, okay? And we're going to look at a DCA of $100 per week. We're just going to DCA. We're not going to do anything with it. We're just going to let it ride, keep compiling our dollar cost average, right? You would be sitting right now, and I want to get an Excel sheet up here so that I can get a little bit of numbers running here on a fresh, clean document. Where are you at? Right there, Excel. Let's go. We're going to bring this on here, and we're going to put these numbers in. Bring it over. And let's do total invested. Okay. Total invested would be 1881 or 18100. I mean, you would be looking at current portfolio value. So value will be $48,027. Not bad. Not bad. That percentage up. We're going to put percentage gains, and we're going to run this. And I'll get this. I'll get this bigger here in a second. I just want to get this onto here, and then I will format it so you guys can actually see what we have on here. Okay. This is going to be 165.34%. And we're going to make sure we run this on the same day. So, so that you guys can actually see these numbers. There we go. Let's bold this out, make it nice and clean. And then let's put all of these two as dollar amounts. So let's go here. And we're going to put this formatted to be a dollar amount. Format cells, currency. Okay, there we go. And then this one's going to be a percentage. Format cells, percentage, and go. And we'll even give this a nice little background here. There we go. Perfect. All right. So this is going to be on Bitcoin that we're going to do this on first. Okay. So let's go take a look at how this would look. This is based on doing it on Wednesday. So we're going to make sure it's the same across the board. If we had done this with the dynamic DCA, and you guys are aware the dynamic DCA uses the wristbands off of the dashboard, where we are DCAing in based on the wristband. So at wristband 6 to 7, it's ×1. Color of yellow, the 5 to 6 is ×2, ×3, ×4, ×5, so on and so forth. Okay. And I want to just show you guys the number on that one and how that would look. Okay. So let's go in and let's go back to the toolbar. Back to the toolbar. There we go. And let's put this on a dynamic DCA and see how that would look. Well, that would be $100 a week, but you would have those periods there where you're doing $300 or $400, $500, so on and so forth. So the lower it pushes down in those wristbands, down in the wristbands, which you saw in those color bubbles, the more money you're putting in. Okay. And so at this point, you would have invested $53,300 and you'd be up 218% right now. So let's go put all of that on here. This is going to be, I want to do this, insert, push that all to the right, and let's do weekly. Let's do dynamic. Get off there. Don't need you, sir. Thank you very much. And let's put these numbers on now. Nope. Come back. There we go. So now we've got 53,000. Now, mind you, yes, you had to put more money in at that point. That's fine. You would just lower your DCA amount, but I just want to give you guys these numbers here. You would have a value right now of 100. Did I put that? I did that wrong. 0.34, 165.34. There we go. That dollar amount would be 169,543. Okay, and then we would have the gains here being 218%. So you can see we got a much better percentage rolling there on that one. So let's bring that down. There we go. And then do that again, 218, because I didn't have that percentage. There we go, 218%. So you can see that running a dynamic works much better than running just a weekly setup of, yep, nice 2 decimals. Gotcha, Dogga DT. Appreciate you, bro. That's how we're looking at this here. Much better to do a dynamic DCA, but it does require more money, but you'd still be up more percentage. So how you would do that is just lower your 100 to like 25 weekly. That way as you're going down, you've got 100, 125, whatever. You still allotted $100 a week, but that's $75 off of your base because you're doing 25. You're not really worried about that money until later. So you're letting it build up interest, whether it be in USDC or whatever. But let's talk about the concept of cutting your losses, your losers, getting rid of them, and focusing on your winners. And how this would work, guys, would be if we go back and we look at the Bitcoin chart here, and we talk about, okay, we're going to enter in on our DCA $100, right? And we're going to do that right here. Okay, $100 winner. We're going to put it in. If it drops 10%, we cut it. We close it out. We're using Coinbase Advanced. If anyone doesn't understand how to use Coinbase Advanced, I will talk to you guys about that before we end here. Just let me know in the chat if you don't know how to use Coinbase Advanced versus regular Coinbase, or if you're using an exchange with very cheap limit order fees, Coinbase Advanced, if you have Coinbase One at $29 a month, yeah, I know you get $10,000 in free trades, but the slippage amount is insanely stupid. Don't do it. I will show you guys pictures if you don't believe me. The price difference that you see on the Bitcoin chart and on Coinbase versus what you buy at is almost $1,000 difference on the price. That's called slippage. So you're not really getting it for free. You're paying a lot more in fees that are hidden in that slippage cost. Okay, so when you buy on Coinbase Advanced with Coinbase One, the more you buy, the cheaper your fees get, and you get money back. So it's super cheap to buy on Coinbase One advanced trading. So on the advanced side, but every time you hit a 10% pullback, you close it out. You keep 90% of your cash, right? So if you bought there, yeah, 10% down. Fine. Let me do it this way, and we'll do it by putting these brackets on here on the weekly. There we go. Price range. So let's say we bought the very top, okay? And it comes down 10%, you would sell there. That's going to be ballpark, okay? So we got one. 1 week later, we're going to do this again. Let me do something here. I don't want those numbers on. I only want the percentages. Actually, just get rid of the text. Can I get rid of the text? I guess not. Label background. I guess we can do it that way. That works better. That's better. I like that. Let's do that. So we have that one there. We go in and we do another one a week later. So this is on a Monday. So let's look at Mondays. On Mondays, we buy again here, right there. And where is that candle at? That candle's going to be at the bottom. 10% run over a week. There. And that's going to be about 10% right there. Okay. Do it again. We got two purchases there. We're out of the market over and over and over again, guys. That's what we're doing. This one here, we're going to be right there. And we're going to bring this to a Monday. And I'm sure this is going to get triggered too, because we're going to keep doing this over and over and over. As you guys can see, 10% move. And it's going to be Monday. Right there, we get closed out on that Saturday, it looks like. Did we get closed out there? No, not quite. Not quite. We would actually have a little bit of a profit time there. And then we would run that into Monday. So let's go there. So we got this one in profit. It runs on, okay? And so let's look at this on the weekly standpoint here. We started on November the 10th of 2021, and we're doing this over and over and over, where every time it falls 10%, we're out, right? We close out, we keep 90% of our money. We get to the bottom, and that is going to be the bottom of the market was here. Let me hide you real fast. Fixed range volume profile. Thank you. Bottom of the market happened on November 21st of 2022. So we had about 52 weeks, 53 weeks that we had losses. So let's go bring that up here on the chart. Let's bring this in and let's talk about that. Let's do losses down here. Losses. Okay. We had 52 weeks. We had $100 a week. Let's do weeks. Let's do amount. That's going to be 53 weeks, actually, I said, and that is going to be $100. You are just going to be formatted as general. Thank you. And that amount is going to be, so this is going to equal total losses, total invested and total losses. Okay. So here we go. We have $100 there. So total invested, this is going to equal this times this. That's going to be $5,300. This total losses is going to be this equals 5,300. Okay. And that's going to be $530. So minus 530. So that's going to be $530 that we lost. That's the $10 each week that we cut our losses, 10%, right? So now we have this total here. This equals this minus 530. That's going to give us $4,770 when we get to the bottom of the market in order to roll into our investments, right? So we're going to take that 90 now, and we're going to go look at the DCA calculator again. We're going to go back here, look at this DCA equal amount, $100, but now we've lost that money, right? That original money is lost. That is going to be $530. We're going to take this 4,770, and if we actually go in here and we go, what is this amount divided by 52? Well, guys, that's $91. So we can literally for a whole year double our investment amount on here. And I want to show you what that would look like by cutting our losses and what the difference would be currently. Okay. So if we go in here and we go, what is that bottom date? That bottom date there happened on November 21st, 2022. And we go in here and we start this on November 21st, 2022. Okay. We're going to go 1 year forward in time. And instead of losing that money every single week, just valuation loss, right? We're going to start now with $190 to current, okay? Let's go put these numbers in and let's see how this looks. Come here, you. Let me do it this way so I can bring this over here. Okay. We are now looking at $190 weekly on a DCA equal amount, okay, from November 2022 to current. This is going to now give us on the weekly, this is going to be new weekly, I'll call this. This is going to be a total of $24,130 that we've invested. The valuation, and I'll bring this over so you guys can see it. I just need to be able to look back and forth here. The valuation of this is $57,547. And then the gains on this is 138.49%. Okay. Now let's go and let's talk about this number and how this number looks. Percentage. There we go. Okay. So looking at this, guys, here's the weekly that we did originally, 165.34%. Why did you do that to me again? Point. There we go. Dynamic as 218%. A new weekly by cutting our losers, we're up 138.49%. Now keep in mind, we've put a lot less in. If you look at our valuation, we actually have more money than what we had. So even though our percentage of gains is less, we've made more money with less money, okay, than what we would on the dynamic. And if you're looking at this weekly, yeah, we put in $1,800, but this was $100 equally. This one we did $190 by protecting our losses, and now we have more money. The percentage is lower, but we have more valuation off of this. So I want to show you guys what this would look like now if we do this dynamically. And now we were cutting our losses as we went down, but we're running this up. And OC, I might need you to hold some numbers for me while I'm getting this, because I'm going to have to do this a little bit differently. But we got to go in weekly and look at all the simulated trades here. From the bottom here, I want to show you this. We know that we're cutting our losses, right? All the way up to that first one. So let me run this in here and take this back to 2021. There we go. 2021 is going to be November the 10th. Was it the 10th? Was that the bottom? I got to go look again. On the top, I mean. The top was November 12th. No. November 10th. The 10th. Okay. So let's go in here and put this as November 10th, 2021. We're now going to do a dynamic DCA, $100. Okay. And we're going to look at this from that point to current. Okay. We told you guys that number, 169,218%. By far outperforms this on the weekly, right? These weeklies get crushed by just doing a static amount. When you do the dynamic, absolutely way more money, but it costs you more money, right? Better percentage though. Let's look at this from the perspective of cutting our losses at 10% on the way down, and let's see what these look like. Is this able to be exported? Let's see. Nope, it's not, but I bet I can copy and paste this onto the sheet. So let's go and let's copy all of this. We're doing times twos here. So actually, let's do it like this. This is going to be 20, 40, 43. I think I can do it this way. Let's try it.
Whenever you need me to hold those numbers, let me know.
No, I'm going to take this all the way to November 2022. See if I can copy this over to our sheet, and then we'll run it from there. There we go. Let's copy this. Let's bring our sheet up. I'll bring in a new tab for this. And then we'll put this on and see if this will go. It looks like it is. Yep, looks like it is. I'm going to have to change all the color, obviously. Black. There we go. Perfect. All right, so we got all the numbers here. I'm going to go in, and we're going to take this number here because I want to get this up to the 22nd of November. That's all of this here. Perfect. All right, so we're going to add all of this up here on this row. I don't know if this will work or not. We'll see. We'll see what it does. This equals sum. We'll see if it works. Wish me luck. It does not work. All right. OC, do you have... Oh, there it is. Hold on. It equals 0. Do you know a way that I can do this? Or does anyone know a way that I can do this without doing all the numbers? If not, we'll just add it all up. OC, you ready for this?
Yeah.
Start calculating the numbers. We got 2
right,
plus 2 plus 3. So we're
right.
at 4,
wait.
7, 10.
Let's get started.
What's that?
Again, from the beginning.
2, 4, 7, 10. Just make sure I got these numbers right. 13, 16, 19, 23, 27, 31, 35, 39, 43, 47, 51, 55, 59. Had to think their numbers. 59, 63, 67.
Right.
This is going to be 71, 74, 75, 79, 83, 87, 91,
94.
96, 94.
Yeah.
Okay. Plus 5, 99, right?
Yeah.
Okay. So keep track. 99, we're now at 104, 109. Now we have 109 plus 30. So 139. 139 plus 30. What's that number at?
Last number?
That's 160. 160, 172. 177, 184, 189, 189 plus 25. What do you got there, OC?
214. 214.
Plus 11. Plus 11.
225.
All right, so 225. So we have 225 that we did here on weeks of on buys, right? Of 100s, segments of 100s, right? So that's going to be times 10. So that's going to be $2,250 that we're taking out of this because we protected our money. And so out of all of that time period, we would have invested up to that number. We would have invested a total of, let's go back and look. Invested amount at that point is a total of $24,300. Okay. So go back to the tab, 24,300. Let's go in here. It's going to be 24,300. 24,300. And you said that we said 2250 was the losses, right? So in total, we now have in our repertoire here. Did I do that right? 225 times 10. Yeah, that's right.
Yep.
So this amount here is going to equal this minus this. And now we have $22,050 that we can still add in at the bottom of the market. Let's go back and compare this on a dollar cost average from the bottom. Okay, so we're going to do $100 again. We're going to make this $190 now because we know that we have our $90 left over. We're going to do this weekly on dynamic DCA, and we're going to start this from the bottom in 2022. November 21st, 2022. Was it the 21st? The bottom, sir. This is going to be November 21st, yes. And to current, based on that, and let's go and check out this number and see how this looks. Do. Okay. We're going to dynamic DCA based on that up to the 7. And we now have $55,000 invested. So new dynamic. Total invested is going to be $55,100. Our valuation on this is going to be $158,929. There we go. And we're at 188.4 percentage wise. There we go. Perfect. So let's talk about the number here, because the number still comes out the best on running it just a dynamic DCA, but you had almost 2 years of negative valuation, right? It took us almost 2 years to get back to zero value. When we look at this on Bitcoin, dynamic weekly is still your best way to go. Absolutely. But you've got 2 years of running negative, worrying about your valuations, okay? What's the difference there? 188 to 218, 158 to 169. There's not that much of a difference there except for 2 things. 1, you have 2 years of negative value. 2, you have no ability to tax loss harvest. And if you guys don't know what that is, I'll explain that to you too. Tax loss harvesting, every time that you took your 10% out, you were actually taking 10% valuation. Do tell. Okay. Tax loss harvesting, you're taking your losses each week that you can then on your taxes get as a write-off. And I will tell you guys, my taxes this year were dropped by about $3,500 on what I had to pay out just on tax loss harvesting. Okay. Because I was running some negative deficits at first that I took out and moved over. So that tax loss harvesting saves you money. It's 1 for 1. If you owe $3,500 in taxes and you have $3,500 in tax loss harvested amount, it is dollar for dollar, you owe zero, just so you know. So when you look at this perspective, you didn't do much there except for not have to watch your stuff being in the red, and that you didn't have to have a tax loss you got a tax loss harvest out of it. Tax loss harvest, it's caps out. It rolls over. So if you had $50,000, for example, in tax loss harvesting in 1 year, it caps out on how much you can apply, but the remainder keeps rolling for years afterwards. Tax loss harvesting is a great secret to know in crypto, guys, or investing, period. And right now you can sell and buy in Canada. Do you know? I do not know about Canada, JR. In the US, I absolutely know that one. So, but in crypto, you can whitewash, meaning you can sell and buy back immediately. That is still allowed here, and so that's going to help you out there, that you can buy back if you want to. So if you guys ever have losses, don't be afraid to sell it and buy it and get some tax loss harvesting, because you have that ability to do it in crypto right now. So let's talk about this, why this matters on altcoins. So the big point that I was talking about on Wednesday was ADA, right? I said, look, I don't want to touch altcoins right now. I don't want to invest in something that has the potential to drop 90% if we are going into crypto winter in comparison to Bitcoins, right? And mind you, damn near the same on the dynamic that you're looking at here, with at the end of the day, added bonus to it, and you get to see this. Now let's talk about the factors that why I would do this with Bitcoin for that difference. Besides this, does anybody know what the top company was in 1990?
MBM.
Drop it in the chat. Let me know what the top stock company was in 1990.
IBM.
Nope. Anybody know? Anybody? Anybody tell me why?
Netscape.
No one's typing. I will tell you. It was Walmart.
Oh, Walmart.
Does anybody know the top company in 1980?
Walmart?
No, GM. General Motors. Do you guys see how changing technology can take something that used to be the best and it's no longer the best? Dunkin' Donuts. Maybe in certain neighborhoods. Let's talk about Bitcoin. Now, I'm a huge advocate for Bitcoin. I love Bitcoin. I think it is going to be around for a long, long time. But could you imagine buying a company like, I don't know, top company back in the, back in the day was the Enron at one point, right? And everyone thought Enron was just going to keep going back up. What happened to Enron? Anybody know? Where'd Enron go? Yeah, exactly. It absolutely collapsed. There were housing companies out of business. There were housing companies in 2008 that people thought this is the greatest company ever. Circuit City, right? How difficult is it for someone to create the next great coding for cryptocurrency? It's not that difficult, guys. And it's really backed by sentiment. If something comes out and people go, oh my God, this has like developed code inside of it that it continues to give you compounding gains on Bitcoin, right? It's Bitcoin 2.0. Absolutely can happen. If you don't think it can, then you don't understand the cycles of business and technology. Would you want to be buying the very top of Bitcoin, dollar cost averaging all the way down, and it never returns back to its all-time high? Doesn't even get close. Or worse yet, Bitcoin 2.0 becomes the next hot thing and Bitcoin's just on the back burner. You don't want that type of exposure at all. You just don't, especially with quantum computing. Exactly. Somebody could decide, you know what? I'm all out of Bitcoin. I feel like the technology is getting there to hack, and start selling on you. There's nothing backing it besides sentiment and speculation. That's just, at the end of the day, that's what Bitcoin is. So if I just bought the top at 30x, you're saying I'm screwed. Maybe, Buck. So why would you want to keep having that exposure when, if it's going to prove itself and re-rally, you can damn near make the same amount of money? That's my point on Bitcoin. Now let's go talk about some altcoins, and let's look at this, okay? Let's do a DCA equal amount, and let's talk about $100, and let's go look at ADA, okay? So I want to put this on ADA. because ADA hit an all-time high and we never got back to it. It's a perfect example of how you would be looking today. So let's go back and look at ADA and see what its all-time high was. ADA. Cardano. Donde está ADA? There we go. It's the extent of my Spanish. Donde está el baño? Yo tengo cerveza, por favor.
Nice.
Yeah, so we're looking back here. I'm on daily. Let's go daily. Let's go back to good old ADA back in the day. 2021. $3.09. That was its high back then. And that was on 3 September. So let's go to 3 September here. Let's put this on Cardano, 3 September 2021. And I do have a segue into trading at the end of all this, just so you guys know. They're already working on it. Bitcoin will be quantum resistant anyways. If they crack the encryption, Bitcoin will be the smallest problem. Yeah, absolutely. I agree. But my point is that nothing is guaranteed in valuation of returns, right? So if something collapses and you've been dollar cost averaging all the way through the collapse, and it never come back, you would have wished that you took 90% all the way down. That's my point, Donna. 2021, September 2nd, I believe was the day of that. And let's go to current. Let's just take a look at this. We're going to do $100 here. Pay yourself is the takeaway. Exactly. Feed your winners, cut your losers, guys. Matter of fact, the person that said that was a 2-time trading champion on Wall Street, just so you guys know. That guy, that was his secret. He said, I feed my winners and I cut my losers. There's never dollar cost averaging is dollar cost losing was his sentiment on his getting into trading. And that's what I said. We're going to talk about how to apply this to trading in a minute. So let's go talk about $100 weekly set amount on Cardano from the top of 2021 to now. You would be at $27,904 right now. For a grand total of $8,904 profit, up 46%. Let's go in and look at the bottom that we had on Cardano. You would be looking at the bottom on Saturday, June 10th. June 10th, 2023 was the bottom. June 10th, 2023. So let's go there. Let's remember these numbers. I'm just going to screenshot this, sir. I'm going to screenshot this, and we're going to drop this in the chat real fast. That'd just be quicker than putting it all on the Excel sheet. Now it's in the chat for you guys to compare it, and you can see both of them right there. And let's go and put this again. That's going to be June 10th, 2023. Yeah, absolutely. Absolutely. So let's go in and do this from June 2023. June 10th, 2023 to current and make this 190 because now we've got all that extra money. And you're talking about a period there of, was that the bottom? Or was it? Yeah, that was the bottom right there. Yes. So that is June 2023. And our top was in there on September 2021. So you've got 12 months, and then you've got September, October, November, December, January, February, March, April, May, June, July. So that's 11 plus 12. Is 23 months times 4.3 weeks. That's 98.9. So 98.9, 8.9 times $10. You're talking about $1,000 off of this number, just so you guys know. Okay. Now let's go in and look at this. and we're going to do this from June to there with 190. We're now looking at $30,000. We're 61% up, $11,534 profit. We put in less money. We have more Cardano. And this is just based on the static, not the dynamic. And we have a better percentage earnings there than what we had. So you guys can see the difference between something returning to its high and something that doesn't return to its high, and how cutting your losers and feeding your winners is more advantageous. Until you get into that point where we start to go up and make new all-time highs, you don't know which asset you're investing in. So if you wanted to use this concept and put it into altcoins to get exposure to altcoins, but not have the risk of a 95% altcoin collapse during a crypto winter, I think this is the best way to approach it, cutting your losers at 10% until it no longer gives you a loser, and then you can start to run that in on your numbers for more valuation. Even taking $1,000 out of this on that one where you were at 8,904, this one, you'd be at $10,500 profit, and you limited your risk the entire time down, and then you fed your winner to high heaven, right? Let's put this into a perspective, the dynamic DCA, and look at those numbers. This is dynamic DCA here. Actually, let's do DCA lump sum, and let's go back to 2021. Okay, we're going to go to, actually, we're going to leave that where it's at because this is already here. So this is going to be your dynamic DCA, dynamic cutting loser. And we're going to screenshot that again. Capture, drop it in. That's going to be that one. And then let's go back to, did I do that? No, I didn't do that right. Forget that one. Get rid of that. That's wrong. Delete that message. I want you guys to have the right one. Dynamic loser, cut losers. This is going to be 2023, June 10th. There we go. And now let's grab that. $2023. Did I do that wrong? Yeah, June 10th, 2023. Okay. The current 190. That's your dynamic. No. That's your dynamic. Good Lord. All right, there's your dynamic DCA cutting the losers from June to now, okay? And then let's go and put this in back to September 2nd, 2021, and let's compare that difference. 2021, June, September 2nd. There you go. There's your numbers difference, guys. On this first one, you'd be at 74.3%. By cutting your losses, you would be up 85.59%. You had to put in a lot less money, and oh wait, no, that's not even right, because this would have been 100 from there. There's your numbers difference right there. You'd be up 74% versus 85%. You would have put in 69,000 on the one starting from the bottom, 71,000 on this, and you would have a lot more ADA right now running up. So there's your numbers difference, guys, on something that doesn't get back to its all-time high versus something that does, and you are going to outperform it with damn near equally on like something like Bitcoin, where you get tax loss harvesting, and you also got to remove the risk of 2 years of downside movement versus ADA that never returned back to its all-time high. You will outperform that without having that risk of exposure. I mean, imagine if you had done this with EOS. I don't know that EOS is in here, but we know, well, let's do Polygon Matic. Shit, this hasn't done well at all. Let's go in and look at Polygon Matic and just talk. We don't even need to lay out the numbers. We can just literally go look at what we, how it's performed from its all-time high to now, guys. Its all-time high back in 2021 was like $2.90. We start the halving, we've actually gone down ever since the halving. So this one would be a pretty harsh one. BTC versus Euro. This was my DCA trading learning as a beginner, made mistakes also. Yeah. So I want to talk about, is Polygon delisted? No, it's still out there, man. It's still, matter of fact, it just had a little run. You can see it here. This just had a little run, but it's not going to go anywhere, in my opinion. Layer 2s don't have a reason with all the new layer 1s that are out. Ethereum's another great example of that. So let's talk about this from the, and we can drop the screen share. And we could talk about this from the perspective of why investing or trading. I mean, if we are looking at our trading and we're using low leverage, okay, guys, we're using low, like 3x, we'll say. Let's go with the 3x and we go, okay, if it drops, well, we'll do 2x. That way it's easy numbers. If it drops 5%, I'm out. That's the same as cutting your 10% losses, right? Because you're using leverage, you can use less money. And you continue to do that. Like, I'm longing this. I think this is the bottom. If you're wrong, you take your 10% out and you keep your 90, right? And then you can go, okay, it's another, looks like I'm getting confluence for entries. Let's go into a trade. Let's cut our losses until one takes off. Guys, at that point, you can ride a trade up endlessly. Yeah, you're going to have maintenance fees on it, of course, but as long as it's moving in an upward motion, upward direction, your fees with a 2x are going to more than suffice what you're paying out in maintenance, right? So, on what are going to be substantially lower than what the gains are, I should say. And so, if you look at trading like this from the same perspective as DCA, cut your losers and keep and feed your winners, you could, on each pullback, as long as that pullback's not breaking that 5% move, use those for more entries and feed your winner trades. And so that was why I wanted to talk about this here. Oh, it's good. You guys can hear me? Okay, cool. That's why I wanted you guys to understand this DCA of cutting your losers and how you can apply it into long-term swing trades, okay? OC, you got any input on this? Because I think we broke down a lot of numbers. I know we've got, it got a little crazy there and trying to calculate some of those things up, but I think that we laid it out really well for people that Bitcoin is damn near the same with no risk on the way down, plus tax loss harvesting and not having to watch a negative count lose money, right? But when you look at altcoins, this can give you exposure to altcoins when you are uncertain about, are we entering crypto winter or is this a local bottom, right? And so just by hitting that and going, I'm going to get some exposure on SWI, you'd be, probably running off somewhere to celebrate right now if you had done that with SWI at the bottom, right? So your thoughts on this and your thoughts on how you would apply this concept over to trading.
So I do have an old perspective here. Back in 2 cycles ago, when Bitcoin huge drop was at 3%, what I did is just basically went to the previous blow off top, measured top to bottom for the bear market, divide that into whatever I had at the moment. So I said, all right, how much money did I had at that moment, right? So I can predict how much more money I'm going to have at this moment to invest, right? So maybe something to consider is setting alerts at percentage drop, right? So that way you can act upon those percentages and not just rely on stop losses. So I would say, you know what could we maybe doing? It is preparing for the bear market. So maybe the bull run is already over. We don't know. We can still apply this strategy. And then set your, 3, 5, 10%, whatever percent you see for the previous bear market, all right? Measure top to bottom, dividing how many entries you want to do. And then, entries with quotations, all right? And then at those percentage. In each coin, it's going to have a different percentage, right? And then you have 3 alerts of a downwards, I don't know, a 3% down, 3% down, and 3% down. And then when you're already on or on previous market lows, that's when you can start looking for DCA back in, all right? So you can DCA back in at the end of the bear market based on percentage drop. And then you just rinse and repeat with the previous, DCA strategy based on risk, right? Based on the risk bands. So, I mean, what I'm going to be doing now, it's going to be following this strategy, but also I'm going to be looking for Bitcoin retracements. So when I have those big retracements, I'm going to be adding at no leverage. Basically, just for example, it's going to be, I think, I don't know, let me do that live, right? So we can have that idea. Maybe if I show it, that's going to be a much easier time understanding that. All right, let's go live in here. Let's see if that cuts me out. And it doesn't. Perfect. All right, this is what I'm seeing. This is Bitcoin, US dollar, Bitstamp. All right, let's go to, I don't know, the daily. Onto the daily, let's double click here and let's measure the previous downwards motion. At this point, we have what from top to all the way to the bottom, we have a 76% decrease, right? So let's just say that I would love, or I would like to enter maybe here, 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 and here. So 1, 2, 3, 4. All right. So how much do you think you're gonna have, or you can save? I don't know, in somewhere between comfortably, right? In between, I don't know. This is what in a year, or less than a year, 6 months, right? This is what is it? Oh man, this is the other way around. Sorry for that. It needs to be like that. And then I need to grab this. All right, perfect. In 420 days. So let's just call it 6 months, right? How much money do you think you can get? Maybe, I don't know. Let's just go for a simple number. Let's go for $1,000. So $1,000 between 1, 2, 3 entries. Well, it's easy, right? Let me just take out my calculator. And 1,000 divided by, come on, man. 1,000 divided by 4, we have 250, all right? Then we have 76, all right? So we have $250 per entry. And then I just say that we're going to be jumping into 4 times, right? So we have 76%. Let's just do, I don't know, 75 for a good measure, divided by 4. That will be a drop of around 18%, 75%. So let's go for a 19% drop. So 19% drop. Just bear in mind that this has happened before, which is, let me show you. Here we have a drop of 76, but here we have a drop of 61. You see that? That's why we're doing percentages and not price action, if that makes sense. All right. So let me just get rid of this. So I'm going to set an alert in here. Let's do it right now. Why not? Let me add an alert on Bitcoin in here. New alert. Where is it? Where can I create the alert? And let's just go right here. The 3 dots. Much easier. Add an alert. Perfect. And I'm going to do price or, on the price. It's not crossing. It's going to be percentage down. All right.
Yep.
And then it's going to be a, 19% within how many bars? I don't really care. So how many bars did I get right here? I don't know, somewhere around here. It will be 100 bars, right? Or 80 bars within 80 bars, right? Perfect. So, and I'm going to be doing down movement 80 bars. And this is going to be hit 1 or what? How can we say it? I don't know. We need 3 of those, right? Or at least 3 of those. Remember the 4 entries, at least 3 of those. So it's gonna be look up for DCA entry alert. And we just created it. All right, perfect. So that means that when we start seeing that 90% drop, we could be looking for a possible DCA entry, or you can wait for 2 of those or 3 of those, right? So when you're somewhere around here, you can start putting in. So you don't need to cut your losses all the way to the top. In fact, you just waited for this long, and then you just start applying your strategy right here. I think it's going to be much, much profitable. And that way, you
But
just
what
add in.
if
Yeah.
your token became EOS? What if your token became an obsolete dead chain? This works great for things like Bitcoin, but that's the idea of cutting your losers and waiting for that bottom confirmation and then double feeding your winners. Um, and so I mean, yeah, that's a great DCA perspective, right? But if you look at something like EOS, you still would not be anywhere near profit, right? And so that's with altcoins, especially Bitcoin, you'd be okay either way. You're just going to get some more advantages on Bitcoin, but with some tokens, if it becomes a dead project, man, you might be screwed for a long, long time. Where you could have saved 90% of your money on the way down.
Wait, but I mean, yeah, of course, but that's why we're measuring the previous top to bottom, right? Which it lost
Yep.
80, 89. Let's go to EOS, right? So 89%, and let's just say it again for possible entries, and we're trying to get either of one of those entries or at the end entry. That's why I said ignore the first 3 and then enter in the 4th one, right? So you just need
Yep.
to DCA the last part. What if it goes like this? Well, then yeah, I mean, you will have to re-enter somewhere around here, but you're going to keep re-entering lows, putting it lower. So when you have maybe something like that, you might be able to get out of that. So, but again, use, yeah,
Yeah.
but again, you are using the cutting your loss in
but
here.
this way keeps you exposed. This way keeps you exposed to risk much longer, versus the cutting your losses on the way down. Like
Yeah,
I'm trying
but
to enter, nope, 10% I'm out, 10% I'm out. Right.
yeah,
So
absolutely. But bear in mind that right here, I mean, you're ignoring everything, and what you just explained, it starts in here. If that makes sense.
okay, no, that makes sense. That makes sense. Yeah.
Yeah. So
That makes
you caught it here.
I see what you're doing there.
Yeah, exactly. So you got it 10% downwards, right? Or whatever it is, it's your DCA cut, and then you re-enter, right? So that's why out of the 4, you look for to start doing it on the 3rd. So this is 89%. Let's do 89 divided by 4. All right, that is a 22.25%. And then you have what? Again, 1,000. So that is 250. So let's do that 250. So you measured, what is it? A 22% drop. There we go. That's good enough. So 1, 2, 3, and this is your first entry. And when you lost, I don't know how much is that. That is your 10%, 20%. So 20% drop down, you cut your loss, right? And then you add it once again, once you go back down here.
Yep. So you're just applying another approach to that with a weight. The problem with that one is the problem with that strategy would be, in my perspective, the issue with that would be that we're not seeing the um, we're not seeing the possibility of another rally, right? And you don't know that there's no more rallies until there's no more rallies, right? So heading into crypto winter. So let's go talk about that real fast because I gotta be hopping off here, but I wanted to talk real fast about the crypto winter perspective, and I got an assessor at my door right now to come and give me my moving costs. So let me do this real fast, and then I will hop off of here, guys. So the reason that I'm looking at right now being a possible crypto winter start is because if you go back and you look in 2000, this was a dot-com bubble. We had a top here on the S&P. We had a top here after a big drop. We came in. Imagine how many people saw this rally here and went, "Oh, we're back, and they just started FOMOing in, became exit liquidity. Market makers can't sell everything at once, because there has to be buyers in order for them to sell, right? So they wait and they do this thing where they start to move the market back up. FOMO in the retail, sell on them again. And they're taking chunks each time we do this until they've got the momentum to sell off their stuff, right? And then look at this. From this point here, you had a rally again, stair step, stair step, stair step, right? They're doing this over and over and over again. That's what I'm seeing is the possibility right now of that continuing drop to the downside. If we go over here and take a look, guys, 2000, we had a 10% drop, 6% pump, 9% drop, 11% pump, 16% drop, 7% pump, 12% drop. We're making lower highs. That is essentially what this is. This is a bearish structure that keeps trapping retail. If we go and we look at Bitcoin on its current timeline now, actually, we're going to look at the S&P first, and then we'll jump over to Bitcoin and get this laid out. If we go over here and take a look, guys, we had a big sharp drop, little rally. We had a drop here from this point to this point. That was 10% down, okay? We go from this point up, we had about a 5.5% rally, just like we saw in previous cycles, right? We had another drop here. This thing wrecked all kinds of people. It actually came down to here. That was another 12.8% drop. And then from there, it went all the way down, first of all, and then rallied back up after that gap, right? The 8% from there, from the bottom of that, even got all kinds of people in there, came up 13.43%. Now, keep in mind, we are starting to do this here where we've got a 6% down and we're now making a higher high on the weekly chart. But if we go and we look at Bitcoin, and I will cut it out after this. Let's go look at Bitcoin. All we've done right now is a lower high. And I'm actually watching this level very closely because of this. We've got this value, this fixed range volume profile right above where we're at. I'm thinking like $100,000 psychological wick up and then rejection at that point. And until we see a higher structure retake highs, prove support, and then go up, we have to assume that we are seeing what we have seen in macro environmental cycles, a more downside move of just a lower high, meaning this, with all the macro that's going on, being another low and another low and another low, is more likely until we break this and go up, then this cycle is the next step. So this has more likelihood than this based on the current macro conditions. And it's very possible we are in the start of the crypto winter now, which means as I'm doing my DCAs, I'm watching closely for that 10% threshold to be hit so that I can accumulate my cash, let it earn on 4 point whatever percent it is on Coinbase for USDC, and have the maximum amount of bottom for when we get to the bottoms of the market. So that is about all I have time for today. I've got Mover here to do an assessment appraisal on moving. But OC, if you want to have any more conversation with everybody, you're welcome to. And if you guys have any questions, don't be afraid to drop them here, and we'll get out there and get those answers to you. But I just wanted to break this down for you guys. A lot of different approaches here, and I just wanted you guys to understand how I'm looking at these current market conditions and how I'm approaching the dollar cost average. So.
Absolutely. So, Piper, I'll take over from here. I'm just gonna make some time for some Q&A. Thank you so much for for showing that up. I'm gonna be cutting out at this point the video just to not make it that long, and then I'm gonna be trying to upload it. So that will be it from now.